The VIX continues to rise as the fear and greed index is indicating extreme fear with a 16 out of 100. And if we come and we take a look at the Volkswagen short squeeze, we ask the question, are we going to see something similar during the 2008 financial crisis? We saw that Volkswagen had a massive drop. In other words, a fire sale from $356 all the way down to $200 before squeezing above $1,000. If we come and we take a look at that exact same week for the S&P 500, the overall market, we saw that it dropped a total of 46.5%, but that was not the bottom for the market. That just squoze short sellers out of positions. Are we going to have something similar to that? Now, before I show you the overall market and where we would have to get to for something similar to happen, the case for a short squeeze is absolutely on the table as US total put option volumes have skyrocketed to all-time highs, 30 plus million contracts over the last 5 days. Now, what this means potential short squeezes across the board, even if the market does not continue to sell off. However, it's not likely that the market is going to rebound back to all-time highs just yet. Now we have a brand new lawsuit from Wells Fargo against JP Morgan over $481 million commercial real estate loan. Now this shows that dominoes are starting to fall. JP Morgan was just sued by Wells Fargo over $481 million real estate loan gone bad. Almost $500 million up in smoke. Why does this matter? Because when big banks start turning on each other, it's a sign that liquidity is getting tight. And when liquidity dries up, margin calls start knocking. JP Morgan is one of the biggest players in the derivatives market. And if they're in trouble, what happens when short positions start getting squeezed? This isn't just a lawsuit, it's a crack in the dam. And if JP Morgan is forced to cough up cash, what other positions will they need to unwind? Forced liquidations, short squeezes triggering across the market, and a potential ripple effect on stocks like GameStop. Now, this doesn't end there. There is actually further evidence explaining why a black swan event is brewing, and in fact is just happening right now. We're in the beginning stages potentially. The Federal Reserve's Bank Term Funding Program ceased extending new loans on March 11th of 2024 as planned. Loans issued under the Bank Term Funding Program had terms of up to 1 year, meaning that final loans granted on March 11, 2024 are due for repayment today, March 11, 2025. Now, this is so important because the Bank Term Funding Program was to provide liquidity to banks, credit unions, and other financial institutions by offering loans secured by high-quality collateral such as U.S. Treasuries and agency mortgage-backed securities. So financial institutions who previously relied on Bank Term Funding Program liquidity will need to explore alternative funding sources to meet obligations. What are those sources? Maybe none. Maybe they can't meet obligations. Maybe they will have to unwind more and more and more positions. Now, on March 11th of 2021, we saw Roaring Kitty post a cat jumping out of the box. This is pure speculation, but are we going to see something tonight, March 11th, 2025, 4 years later from Roaring Kitty? Before we talk about GameStop and AMC, today, Trump says he will be declaring a national emergency on energy. He also said that based on Ontario, Canada placing a 25% tariff on electricity coming into the United States, I have instructed my Secretary of Commerce to add an additional 25% tariff to 50% on all steel and aluminum coming into the United States from Canada, one of the highest tariffing nations anywhere in the world. This will go into effect tomorrow. What is this guy doing? Well, he is essentially playing his cards in the trade war. He is calling everyone's bluff, and he's going to see who cracks first, which is not good for the stock market. It's not good for the overall market, no matter what way you want to put it. Now, we also have a potential government shutdown still looming for Friday deadline, right? Is that going to be the catalyst to crash the market below critical support, which we're going to talk about? I'm going to plug this at the beginning of the video really quick. Like the video, subscribe to the channel, and make sure to turn post notifications on. Plenty of you guys come back to my videos day in and day out because I research, edit, upload, record these, not in that order for you guys. And all I ask is for you to join the family. Speaking of join the family, this is what I'm plugging at the beginning because I think it deserves to be at the beginning of the video or somewhat middle of the video instead of the end of the video for the people who don't watch until the end. joined my Discord server, guys. If you're not in, you're not going to regret it. You need to learn to level up your trading journey, learn the disciplines, learn how to trade, learn how to find support and resistance levels, and figure out what the market is going to do, because a lot of times, day in and day out, there is a lot of noise, and what you need is a great community that'll help you trade. It's the top link in the description. I also post my trades whenever I take them, and I talk with the family in there when I can. So I'm in there a lot, not like a YouTuber where they don't talk in their own Discord at all whatsoever. So just get in the Discord. It's the link in the description. And on top of all the benefits, we have tons and tons of alerts in there that will help you trade and understand the market and see news as soon as you can get it. Okay, now that that's out of the way, we might see a temporary relief today. Well, why is that? Well, we're seeing Japanese government bonds take a little bit of a dip, down 2.76%. Well, does that mean the SPY is going to be up? Well, what are you seeing in the market today? We'll talk about it in a second. Now, the odds of the Fed implementing a single rate cut of more than 25 BPS in 2025 has surged to 32%. Markets continue to price in higher odds of a recession. Now, we've talked about this before. If the Fed comes out and they do an emergency rate cut or something along the lines of that, or they don't, both can print negative bearish catalysts. So there's really no way out of this recession potentially. Now the SPY is trading at 559.64, almost going green on the day. It's a very ugly day to trade, I'm not going to lie. I lost a couple of trades today and I didn't want to trade anymore. But here's a couple of things that I want to look at and show you guys. First of all, right now, the SPY is due for some sort of a relief bounce. Now, the reason I say that is because I'm going to take you over on the daily time frame. I'm going to throw in the 250-day moving average, and you can see that the SPY is trying to get a bounce off of the 250-day moving average over on the market. Now, the last times we tested the 250 moving average, we seen major bounces off of it initially before potentially coming lower, and this wasn't even a sign of too much weakness in the overall market compared to where we're at right now. So this is the first thing. Second thing is these descending parallel channels that the SPY traded in when it hit its all-time high. This is now hugging the bottom of this on the weekly chart, trading below the midline and bouncing off of the bottom line. So we have two support scenarios that show the S&P 500 was due for a bounce today, but it's not even bouncing. In fact, it is only holding. Okay, so what does that mean? We could, best case scenario, in my personal opinion, see moves up for the rest of the week into Friday before potentially getting negative catalysts over the weekend and continuing our downtrend. Now, that's best case scenario, in my opinion. That doesn't mean that we do see positive moves throughout the week. What we've seen on the daily time frame, and this is also crucial, right? On the daily time frame, you came up to 562 and immediately got a rejection and pushed down to 556.30. If you pay attention to the volume candles on the market, we see that these bigger players aren't actually ready to prop up the market, right? If you see moves, they're likely retail trying to buy the dip on the overall market. But when you see macro selling like this, it's not time to try and time the bottom and play it to the upside. If we look at the 1 hour chart, I also want to show you, notice how they are walking. They are walking it down. They're walking the S&P 500 down, right? This is a controlled unwind of positions and they are walking it down. In fact, every single drop is right around 1.9% to 2%. And then it scales back up a little bit, maybe 0.5%, maybe a full percent, drops another 2%. Same thing. This is stair stepping downwards. With that being said, we did already come back up to 563.60, right? And we could have potentially come all the way up to 567. I wouldn't even mind if we came up to 567. And then what would happen at that level at 567? Well, bang, you would see another fat drop on the overall market, taking us into this range around 553, right? Overall, if the SPY ends up breaking beneath this, which we faked out earlier today, right? The levels that we have is 553.30 to 551.30. Okay, there's a $2 buy range right there. At that point, if we crack below that, you could fall much further down to 537, so on and so on. Again, the macro, I do want to state that if the SPY, just like 2008, fell 46% before any sort of positions had to really unwind here, here's what the SPY would have to do. It'd have to come all the way down to sub 400. It'd have to come down to 330. Is that possible? Well, for a technical crash, it is kind of possible, right? But you really need a black swan event, which could potentially be brewing. What we know right now, and I want to bring up Roaring Kitty real quick again. This market it could be very hard to trade for some of you guys. Now, there's a couple things to know. That's very, very simple. Where should you park your money? Is there any trade that's certain? And the trade I think that's certain, nothing is financial advice. I'm not a financial advisor. I'm just saying, in my opinion, what I do, what I think personally is we had the American flag with the mic, and then we had the fire, and then the crash, and then the cheers. So we're seeing the market sell off. I would consider this a fire sale of some sort. Potentially, right? Now, is it a fire sale into a boom? And that's the emoji, because the boom could mean boom or crash, right? The emoji. Or is it a fire sale into a crash? And that is the uncertainty. But what comes after is the certainty, which is the cheers, right? And we know his main play is GameStop, which is going to bring us into GameStop. That being said, what am I trying to get at? Well, if you can't figure out how to play the S&P 500 because of the uncertainty, I see GameStop still squeezing, whether it's a Volkswagen type of squeeze, and I also see AMC squeezing too, okay? And we're going to talk about AMC's chart, whether it's a Volkswagen type of squeeze or whether it's a different type of squeeze, right? A MOAS, or maybe even a squeeze only up to $300, right? I believe it'll go much higher, but I'm just saying I do still think this is one of the certain plays. Now, when will it happen? Based on how wide the timelines are between April 20th and end of June. So between late April to early July is probably the time frame. I also want to note real quick, before I show you the charts, Ken Griffin and Doug Sifu's companies have received subpoenas for an investigation into market manipulation and naked short selling. Now, this isn't an admission of guilt. Who knows if they're going to get anything out of this, but we are seeing a little bit of a step forward. Now, GameStop is trading at 22.68, up 1% on the day, but you can see how there are large sell walls on GameStop. You can see how there are large sell walls on GameStop. At any point we try and go higher, they have these major blocks up here, okay? The first huge block is between 35 and 48 bucks, right? Because they know if we break that, it's easy moves to 60. Between $62 and $120, there's huge blocks again. And why do they know that? Because when you get to that 125 strike after this box and you get over it, you're going to see a major gamma squeeze because they have those 125 strikes on GameStop, right? There's a lot going on here, and you can see how they're trying to block a MOAS from happening. The same thing is happening with GameStop. Major sell blocks, sell walls of 750, 1350, right? Between 750, 1350, then 57 to 75, and then obviously all-time highs 315 to 400. Okay, so we have major sell blocks over here. If these are sell walls as in shorts, right, will they actually have the leverage to pull these off and pull these down with the market doing what it's doing and entities having to unwind all this other stuff? Well, they could have been purchasing for this reason. We've seen institutions been loading up on GameStop and AMC. Maybe they are purchasing to save the short sellers' asses and put these sell blocks in place. Maybe they already have the money here. Now, will that matter? It depends, right? If Roaring Kitty's wild card is exercising, 20 million shares or something with GameStop, who knows if they're going to be able to, stop the algorithm from pushing this thing higher, right? Stop the break, stop the market makers from purchasing all of those shares and hedging. Now, we still can't disregard that AMC and GameStop have tons of institutional ownership that have been adding up, right? Nearing all-time highs for AMC and at all-time highs for GameStop. I don't blame them. The company's sitting on $5 billion in cash. Now, Bitcoin, weekly chart, it's still hugging 80K. I want you to pay attention to this because there's not really support in this entire candle from November of 2024. And if we give back all of those gains, right, if we break this support that we're at, even this isn't heavy support. Right now, Bitcoin cracked critical support at 90K, 89K, right? And it flushed to this candle in where it's trying to hold up, but there's not support here, right? It's very minimal. With that being said, the flush down to 73K, 73.5 is very, very likely. Will it happen? If we look at the Bitcoin power law corridor, I've brought this up weekly time frame, logarithmic scale. The previous times where Bitcoin dipped before having a massive rally was a 40%, 62%, and we're only down 27%. I also want to note that Bitcoin did only do something similar, like almost identical to what we're trading at right now, back before the March 2020 COVID crash. I've explained exactly what that was, and we're in a similar boat right now. We tested right above the green line. We ended up coming up trying to retest it again. We got an absolute flush, a monster flush. We're in the same sort of setup where it's this long mid cycle, right? Where we get a flush before potentially a super cycle. Now, if we get this flush, how low will it go? Well, probably just sub 60. Given this one went much lower, if it's a black swan, probably just sub 40. Okay, so that's something to watch. Now, Tesla. I want to talk about Tesla because it just got a forecast, I believe, from Morgan Stanley of $340 12 months out. Now, this is interesting, right? Because that would be a huge gain for Tesla. And Tesla would also squeeze short sellers out of their positions. There's a lot going on with Tesla right now. I'm going to show you the charts very briefly. First of all, on the daily, Tesla filled the gap down to 220, where I have been calling out for. It actually almost filled the gap. I believe it's like 219.60 or something along the lines of that. But I've been calling out for a break under 240, right down to 220. We did get that flush perfectly fine. We're on the monthly chart. Major sell blocks at the highs, major buy orders at these critical supports. If there's a black swan event brewing and the market decides to crash, watch Tesla to absolutely get a bounce at 142. I don't see it breaking under that. Will it even get that low? Again, black swan event. I'm not calling for Tesla to get that low. I'm just saying if markets decide that they want to nosedive just like '08, then this is something that you could see. Microsoft, we need to just take a step back at the Magnificent Seven. It just cracked critical support, okay? Given Microsoft does have some nice supports here, right? We could still see a breakdown to 345 to 325 and maybe even that next level of support sub 300. Okay, this just cracked critical support. Bitcoin just cracked critical support. Google got a massive double top, it looks like, right? Getting flushed down. These are just beginning to crack. Given Meta actually looks pretty good because this company has been doing well over the past few years and it has major order blocks. Black Swan event, 436 buy range, right? Amazon, same thing, similar to Meta, but it did just get a very rough high and a flush down. Similar to Microsoft, it cracked critical support and it coming up to retest it right now, but this has some decent supports on the way down. So how low will Amazon go? Who really knows? Nvidia 109.66, it did hold 107 at least for the time being, but this is where support has to really show you that it's here, right? Between 103 and 109. Okay, because if we don't hold that, you can see there's really nothing under 101. You're going to flush right down to probably 93 to 96 bucks and then maybe even lower. Apple has huge buy blocks. I think this one will actually hold up very well, even in the case of a dangerous event in the market. We've seen Apple kind of slow down on their growth compared to other companies, at least this year, but we have major buy blocks anywhere near the low 200s. I mean, people would just love to buy this thing up between 192 and 206. Overall, guys, last but not least, Kathy Wood went shopping today of ARK Invest. She bought Tesla, Hood, Palantir Coin, Shop, AMD, and Tempest AI. Are these the bottoms? Well, ARK might be thinking so, right? Kathy Wood might be thinking so. She also sold SoFi, which is pretty interesting, XYZ, and Path. Okay, SoFi was her largest sale of almost $6 million. That is what I got for you guys for today's video. Hopefully you enjoyed watching or found value out of the video. Again, don't forget to get in the Discord server. It's the top link in the description of any video. Okay, go down and check the links. Join the Discord. Mumu right here. The second link is for Mumu. They are a great platform in my personal opinion. I don't give financial advice. I'm not a financial advisor and I don't know what happens behind the scenes. But what I can tell you is that they give access to shorting as a retail trader, trading options all for free, a customizable earnings calendar, viewing further strike prices, and a lot more info. I think they have an easy interface. They give you the news, they give you the earnings calls, they give you all this good stuff. But on top of that, for no reason, When you sign up through my link and deposit, once they approve you, they're going to give you up to 30 free stocks, each valued up to $2,000 per stock. You can hold them or sell them or whatever you want to do, but it's free money. And then they're also giving you 8.1% APY on your uninvested cash, meaning whenever you're not in a trade and your cash is unsettled, or you just don't want to trade, or you're away from your computer, whatever, you're still earning higher likely than your bank account. So press the links in the description, join the Discord, and sign up for Moomoo through my link and make a deposit. That is it, guys. I love you all. God bless. Lottery Stocks out.